trial balance, so this means the adjustments have been completed. For impressions, dance school have been provided for the year end September 30th, 2017. The new bookkeeper alphabeticized the accounts, which everyone here hates, right? So what I think is probably the easiest thing for us to do is to go through and just assign what type of account each one is. It'll make life a lot easier later on when we get to it. So, accounts payable, what type of account is that? Liability. Accounts receivable? Asset. Accumulated depreciation? Asset, right? It's a contra asset. So it belongs on the asset section, but again, it does the opposite of what an asset normally does. It's got a credit balance. Capital? Withdrawals? Automobiles? Building? Cash? Copyright? Yeah, it's an intangible asset. Depreciation expense? Dance lessons revenue? Revenue. Repair expense? Gas, oil, and repairs expense is an expense. Land? Land for future expansion? Notes payable? Brand name? An asset. Rent revenue? Salaries expense? Store supplies? Unearned revenue? Quite a few people included this unearned revenue in their income statement. Remember, this is a liability, it does not belong in your income statement. So, I'm just going to use a different page here so I don't have to keep flipping back and forth. We're going to start with our income statement. So, the easiest way to get a mark on your exam, don't forget the title. Or I guess it's the easiest way to lose a mark or get a mark. So this is Impressions Dance School. Income statement. And it is for year ended September 30th, 2017. So this is our income statement. We're going to start with our revenue. And what do we have for revenue? Dance lessons revenue. And rent revenue. So dance lesson is for $154,680, and rent revenue was for $21,000. Now, just because I also noticed on the exam, a lot of people were using accounts more than once. They're only used once. So the only thing that you'll see twice is the closing balance for the capital, right? You'll see at the end of the statement of changes in equity, then again in the balance sheet. So we can, after we use them, we can scribble them or put a check mark beside them, just so we know not to use them again. So our total revenue is $175,680. Got our expenses. And we can start going through here and looking for expenses. So we don't get our first one until we get to depreciation expense. For automobiles. And depreciation expense for building. We've got gas, oil, and repairs expense. $29,600. And salaries expense. Again, it makes it a lot easier, and you don't have to think about it and worry about making the mistakes when you set them up and you know what you're doing. So taking that extra 2 minutes ahead of time will make life a lot easier and reduce mistakes as we work through it. And I'm just going to mark down that we've used these expenses so we don't accidentally use them twice. And does anyone have a total for me by chance? 239,100. And what does that leave us with? A net loss of 63,420. Everybody got the same number? Okay, so why don't we go through our statement of impressions and answers? We'll set up our statement of changes in equity. Impressions, dance school, statement of changes of equity for a year ended September 30th, 2017. So we have our Alicia born capital opening balance, which is 168,960. And here we can see in the notes the owner made no investments during the year. And we didn't have, so there's no owner's investment and there's no profit. So do we add anything to this? No, we don't. So we can go right into less. And quite a few people didn't follow the structure. So I didn't really mark poorly on following structure as long as you had the numbers. Midterm 2 and beyond, I'll be looking for you to actually follow the structure that's laid out in the book and like we're doing as well. So less, we can less our withdrawals, which are for 10,000. And since we have more than one item to less, we put it in the column, this subtotal column. And we have our net loss. Of 63,420. We total it up, and we're going to less 73,420. then we get Alicia. Drawing capital. Closing balance. So what is 168,960 less 73,420? Awesome. 95,540. We have our closing balance. Again, doing this to get this balance will be the same as doing the closing entries and using the T-chart with the income summary. It will result in the exact same balance. So typically what you would do in real life, you would do your income statement and your statement of changes in equity, and then you would do your closing entries, right? Because you'd want to have this information available to your end user. So, what the question is all about now, we can do our classified balance sheet. So the first thing we're going to start with is our assets. And of our assets, what is the first category?
Current assets.
Current assets. So we're going to work our way down looking for our A's. And I'm just going to check mark that we used withdrawals. So we don't accidentally use it again. I'm going to leave capital unchecked though, because we will use it one more time. And so working down, is accumulated depreciation, or is accounts receivable a current asset? Yes, because we will convert it to cash within the year. We check that one used. 13,500. Accumulated depreciation? No.
No.
Automobiles or building?
No.
Cash?
Yes, cash.
Cash is, because it's already converted to cash, so it is as liquid as you can get. Copyright, is it a current asset? No. Land or land for future expansion?
No.
Brand name?
No.
Not a current asset, nope. Store supplies?
Yes.
Yes. What do we get when we add them all up?
29,480.
Sorry?
29,480.
29,480?
Yeah.
What is our next subcategory or category?
Non-current investments.
Let's look through here. Looking at our A's that we haven't used. Accumulated depreciation. Is that a non-current investment? No, it's not. Remember, non-current investments are, they're things like notes receivables, things like land for future expansion, but they're not used to create revenue or generate income for us at this current time. Shares in other businesses, that kind of thing. So these are linked to the assets that are used to generate business or income right now. Automobiles,
No,
building,
no,
copyright,
no,
land,
no,
land for future expansion.
yes.
Yeah, you got it. And I believe that's it. Yeah, that is it. So we don't need to put a total. We can just put this land for future expansion directly into the total column here. What's the next category?
Properties, plant and equipment.
Property, plant, and equipment. I'm going to skip past our accumulated because we know that they're linked to the asset that we need. So first one is automobiles. And we're going to
Less the accumulated depreciation.
less the accumulated, yep. Depreciation for automobiles. So we're going to use this column here. 71,000.
39,360.
Yes, less 39,360. And what do we get as our total? 31,640. Oops, automobiles and the next one I see is building. Less accumulated depreciation building, and it is 236, and our accumulated depreciation is 164,000. So what is the total? 73,000? 72,000. Okay. Let me mark these used. Is copyright a property, plant, and equipment?
No.
No. How about land?
Yes.
Yes, it is. 32,900. And that is, and brand name, is that property, plant, or equipment?
No.
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 So our total,
136,540.
is what, sorry?
136,540.
540? Is that right? 136,540? Excellent. What is our final
Intangible assets.
intangibles? And what is, there will be our remaining assets. First one is copyright.
And
That's right.
$6,900. 8,800.
And now we can add these up and get our total assets. So we add up these four on the right, what do we get?
231,720.
231,000?
720.
720?
Yeah.
All right. Now, we can do our liabilities. What is the first category for liabilities? Current liabilities. And which one of these are, we'll go start from the top. Accounts payable, is that a current liability? And looking at,
Nothing else.
there is something else, yes.
Notes payable.
Notes payable, the note payable plus interest are due in 18 months. Is that within 1 year? No. So what are we missing? Unearned revenue, that's right. Oh, I could have put. Yeah, I'll just- What is our second category for liabilities?
Long-term liabilities.
And what do we have for long-term liabilities? Our only other liability. Notes payable. That is for 90,000. And it's our only one, so we can go straight to the total column. And we can get our total liabilities. And that comes to 136,180. Leaving us with just our equity. It should be, yeah, Alicia Bourne Capital. We're pulling that from our statement of changes in equity. 95,540. total liabilities and equity. Add these two up, and moment of truth. It works, balances. And we have a classified balance sheet.